Hello everyone, welcome to this webinar today, starting at Differentiator Service. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome. Hope you're having a great day. If you have any questions during this webinar and you're watching it as a direct webinar on your computer, you can type in a question to me. If you're watching on the live feed that we're doing to social media, LinkedIn, Facebook, and YouTube, welcome. And but you'll have to send me an email. Thanks, peter@essbiztools.com.au. Okay, so let's get underway on the show today, where we're going to be exploring these various items. How accountants gain from business advisory services. A massive 95% of accountants that were surveyed by the CommBank team indicated that they would be diversifying their services during 21-22. This was a strong endorsement of business advisory services in what they had to say. In fact, when they nominated their highest demand areas, they indicated corporate finance, including mergers and acquisitions, which I know would require business plans, budgets, cash flow forecasts, and perhaps an understanding of crowdsourced funding, equity raising, and Section 708 as part of the wider definition of mergers and acquisitions, and business advisory services. And then to a lesser extent was tax consulting. But please note it was tax consulting, not tax return preparation. So what's your firm doing? Accountants Daily also have noted that 70% of employed accountants were evaluating their employment prospects elsewhere. Accountancy firms need to be offering interesting and challenging work and implementing on-the-job mentoring to retain and attract talent. This was the comment by Andrew Geddes, who I think is an Australian accounting guru, but for 10 years was the chair of a top 200 ASX company, Green Cross Limited. And you can listen on our website to the comments made by Andrew Geddes in our podcast series. The Tax Commissioner has also bought into this overall conversation about the services that accountants should be offering. He made a comment recently: you must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years. Food for thought. Business advisory services is the key differentiator service for small and medium-sized accountancy firms to provide to your clients. We had a webinar about 6 weeks ago, which featured an American accountant, Adam Hale, who commented about the virtual CFO service that he'd introduced. Andrew Geddes was watching that webinar, and shortly after I had a podcast interview with him, and Geddes made the comment, it's a new business model. I think it's going to revolutionize the service globally. High praise indeed for the concept that accountants should be providing a virtual CFO service. The new business model that's been pioneered in the United States because of the ongoing technology advancements with the software that's utilised to send tax returns to the American Tax Office. And that's happening in Australia also, isn't it? So the new business model that's emerged from many accountancy firms in the USA is built around supplying services 52 weeks of the year to clients on a virtual basis. Now, we've made some modifications to that because based on my experiences, having been a chief financial officer in a listed company, I know that there's a real need to understand the business of the business. What is the business? Traditionally, when you're preparing income tax returns, you basically start with the end product, the annual accounts. They're already prepared, or you may be making some adjustments to them. But to really be the equivalent of a full-time chief financial officer in your client's business, you need to go back to the beginning. You need to go through and understand where the weaknesses are, where the risks are in the business, and understand the flow, what happens, where do the raw materials come from, what's the supply difficulties, is there problems in the supply chain? And we've seen plenty of that in the last 3 years, haven't we? So understand the business, and then every business needs a business plan. And in virtually every case where you'd be taking on this sort of appointment, I think you'd want to sit down with the leadership team and redevelop the business plan, because the business plan then leads into the financial forecasts, the very important documents of budgets, key drivers, that's the sub-accounts relative to items such as inventory, raw material stock, debtors, creditors, etc. Then into the cash flow forecast and the projected balance sheet. Now, I think those forecasts should be done 5 years in advance. That's what the American firms that we're monitoring are doing. And then they're updated every year. So the client's got an ongoing 5-year horizon in front of them. They should know where they're going, and more about that shortly. And what you're developing is a 52-week monitoring system for your clients. The business model is set around then some weekly and monthly functions. The weekly performance reports, very important. I know from my experience in a listed public company, every business activity, and we had hundreds of them, were subjected to a weekly profitability report and key performance indicators. And these were analysed by the accountants in the local offices, and then by head office, and then by the CEO, who is reviewing the figures, looking for exceptions. The monthly financial accounts and analysis report then submitted to the monthly business review meeting, and all embracing important concept for the virtual CFO to deliver. There's other business enhancement services, which we're going to talk about shortly. There's obviously ongoing taxation advice. In our model firm in America, they ask their clients whether they want to have them handle their taxation affairs as well as their non-negotiable financial forecasting, which is the budgets, the cash flow forecast, etc. 90% elect for that firm, Summit CPA, to handle their taxation affairs as well. So you can give consideration to that. We're looking at this new business model. We're trying to commission. More comments attributed to the tax commissioner, where he warned that changes were coming. And he said, focus on being a brilliant and trusted advisor. This is the role that I envisage for the vast majority of accountants servicing the small and medium-sized market. A brilliant and trusted advisor on more than taxation, on business matters. I believe that the business advisory services is the foundation service that you can build towards offering a virtual CFO service for those clients who wish to receive this premier service package. I acknowledge that not everyone's going to want the full 52-week of the year type service, but you need to be working with these business clients more often than just at the annual tax return work. So if it's not 52 weeks, let's make it quarterly, or in some cases just monthly, maybe not the emphasis on doing weekly work. In this presentation today, I'm concentrating on what we have included within the Business Advisory Services Starter Package, which allows small and medium-sized accountants, bookkeepers, business advisors, and consultants who are acting as virtual chief financial officers to be able to assist normally young and small clients to be able to plan and then grow their business. So getting ready to deliver advisory services. So where are we going to start? I think you need an SME needs analysis. What is your client's vision? What keeps them awake at night? Ask your client what extra services they would like to receive. If you've never done this, I can assure you, you will be surprised with some of the comments. Some clients think about things for years, but they don't think you can do them because you're too busy doing tax returns. So it starts with the business of business. How does this business operate? I briefly mentioned this at the very beginning of this conversation today. Complete the checklist for the business organisation. Who does what? What happens if someone doesn't turn up or they're on holidays? Who checks in the stock of raw materials that's been received from the supplier? Who checks the invoices, the shipping invoices? Who updates the stock quantities? There's a whole range of issues that you probably don't know too much about at present, about what goes on in your client's business. And that's understandable if your role's been basically to just prepare the annual accounts and the tax return. But now, if you're going to take on a virtual CFO role, you've got to look at the financial controls on the entire business. So what weaknesses are there which are going to create risks? And is there a requirement for some training for the client's team? I had a situation in the public company that I was with that the foreman in major meatworks that we were operating did not understand what the information contained on a sheet that they were being handed a couple of times a day, which was productivity figures, all sorts of key information that the office manager or an accountant in our organisation thought was very important and that they should get. When I asked them about the form, which I called by an accountant's name, key performance indicators, I got a shocked look and they said, "What are you talking about?" And I produced one of these forms. They said, "Oh yeah, we don't understand that. So we just throw it in the rubbish bin." So we had to do some training. We changed the name of it. We changed some of the wording so that they understood it. And then they become enthusiastic users of it because they could see some benefit. It helped them do their job. I think business planning is very important. Business plans are like maps for tourists. If you don't know where you're going, how are you going to know when you get there? And how are you going to measure your progress along the way? The client may already have a business plan, but when was it written? If it was written 5 years ago, it's out of date. Even, I think, 2 years ago, it's out of date. So has it been revised? Now is the time to start with an updated business plan. And this is how I think you should be starting with these clients. Review the business of the business so you've got a clear understanding. You identify where the potential risks are. Sit down with the leadership team and develop a business plan. Now, obviously, you've got to talk to your client about this because it's not all going to get done in 5 minutes. But then we can move into the predictive accounting process. And this is budgets, but for each individual business unit, please. Don't do the overall business if the business has got 6 or 7 different operations or even more than one. Got 2, 3. Break it up into those activities because there'll be separate managers for each of those activities, or there should be. And you can then target so that that little team that runs a particular business has got their own budget, got their own key performance indicators, and then you can measure each week or month or even day their actual performance, so to give them feedback. This is where you become a real accountant. And don't put all the budgets into a consolidated budget at this stage. You can at the end of the process, but try to keep it separate so that you can get some measurement. Consolidated budget and key performance indicators are very important coming out of this process. There are key drivers, and these are the sub-accounts that are vital in the preparation of budgets. You might have raw materials inventory, labour manning targets, electricity, gas, oil, fuel, purchase and usage, completed stock, debtors, work in progress, creditors. Now, these are going to vary depending on who your client is, obviously, but there's some pretty standard items there, isn't there? Debtors, creditors, stock, if it's a business handling stock, but some of the other things may vary. It will give you a good indicator. And from those key drivers, that information feeds in to the other documents we're producing, the cash flow forecast and the projected balance sheet. Incidentally, check the balances. I've seen some big mistakes get made here. If the average stock on hand is 6 weeks production, just make sure it is when you've gone through and done these. You haven't brought it down to only 1 week, or you've let it well out to 12 weeks. Sometimes things can go a little bit wrong when you're using software. Just make sure it all ties up. Then we go into the cash flow forecast. Information can be obtained from the budgets, the key drivers, and also the balance sheet. Analysed to determine whether your client's going to be able to comply with the bank's or lenders' protocols that they may have. They may require a certain working capital figure to be there all the time, or whatever. Just check it. And this is the key indicators to whether additional funding needs to be required. Now, where's it going to come from? You should be thinking about that question right from the start. Where's it going to come from? Is it internally generated funds, or is it borrowing? If you're going to borrow, does the business have security that can be offered to a lender? Or is it likely to be that you're going to be looking at trying to raise capital? Is the leadership team interested in raising capital from the public? There's some real opportunities these days. We've got crowdsourced funding, equity raising. We've got Section 708 of the Corporations Act, which has been available to raise up to $2 million in a 12-month period for the last 35 years. Then we move into the projected balance sheet. This is a very important document, and a lot of people, when they prepare budgets and cash flow forecasts, don't prepare a forecast balance sheet. I think it's important for a couple of reasons. Number one, to make sure that the whole process balances. We're accountants. We've got to make sure things balance. Otherwise, we can be talking to a client and giving them the completely wrong picture as to what's going to happen within their business. And I've seen some very bad mistakes made in that area. But if you've got a projected balance sheet and everything is balancing, you're overcoming that problem. What it is going to enable you to do, though, is to act as the financial storyteller, to be able to sit down with your client and the leadership team and indicate to them that based on the decisions that they're making now relative to production, research and development, acquisition of new premises, this will be the result of what the company looks like in 5 years' time, where they'll be able to sit back and say, gee, it's going to be worthwhile working very hard for the next 2 years to get all these things underway. And I think it's also very important that at the end of every 12 months, you value your client's business. So you can show to them that by implementing this strategy, this real financial control strategy on their business, that you will be able to show them each year what you think the business would be valued at. And in doing that, of course, you need to be mindful that the multiplier that you're using, I think, potentially should be improving as the business improves, as the business establishes more and more systems, because the secret of getting your client's business to be valued closer and closer to what a initial public offer type valuation multiplier is for you to have your client install the systems and the processes, very similar to what a company that's undertaking an IPO would have. Now, you mightn't want to go the full distance and have an audit, but there's a whole range of other things, and part of them is what we're talking about here. This is a big part of it. Getting this financial control and forward forecast in place is a very important part of all this. So the business valuation, I've got some other notes there, illustrates to your client the benefit of decisions they're making now. It should be an integral part of the financial forecasting proposed process and prepared annually, as I said earlier. Then I want to look at the 52-week financial monitoring. What do I mean by that? I think there's a great opportunity with today's technology, software, of course, and the communications from your office to be able to be performing this role as the CFO. And it starts with the weekly performance report that I've mentioned a couple of times earlier. It's a great way for a business to know how they're going. And even if they've only got one activity, they can still do this, but if they've got a number of different activities, it's a great management control exercise to prepare a profit and loss account. Sure, there's some estimates in preparing a weekly profitability report, but you can get very accurate on these. And big companies do this. Company that I was involved had 4 major meatworks, but then hundreds of butcher shops and other activities, and they were all subject to this process. Woolworths and Coles do it. IGA stores do it. And they all know by Monday at the local level what their results were in their various departments. Some Woolworths stores have got 50 departments in them. They know the general manager of that store is able to sit down with the manager of the bakery or the butcher shop or some other fruit and vegetables and so on, and have a discussion about how they performed in those previous 7 days. It gives them a great ability to fine-tune what they're doing. Think about your client that might be operating a butcher shop in the mall outside of a Woolworths store. Is he or she going to this trouble to get these sort of results? Because if not, they're in the dark, really. They don't, but they notice Woolworths are doing various changes and they wonder why they're doing that. Well, one of the great advantages that Woolworths manager's got is he's got last week's results, the key performance indicators, the profitability. I'd really suggest that you look at that weekly type input. So this gives the business unit manager of whatever business it is and the overall leadership team some information that they can sit down and analyse. It's far more prevalent if it's only last week's figures, last week's result, key performance indicators, what went wrong, average sales, all sorts of figures can be looked at. And then we go to the monthly financial accounts. Now, you've already got this set up with the software for your client. Profit and loss accounts should be prepared for each individual business unit, not consolidated into one. Obviously, there's key performance indicators. You can update the business health chart summary, which is part of the system that ESS BIZTOOLS has, and you produce a budget variation report. The KPI business health check summary allows you to very quickly identify anomalies. Where did that figure come from? That's out of whack. And it might show that A, there's a problem, or B, that someone made a mistake in the calculation. And the balance sheet, it's prepared each month, I think should always have supporting schedules for each balance sheet item, because over the years, I'm sure we've all seen some major errors in what turns out in a balance sheet because something's been charged to the wrong account. So just a summary supporting it. Now, the business review meeting is very important. I think you should be the facilitator of this. You should be saying to your client, I will organise. Probably 21 days after the end of a month, bring the leadership team together. Explain to the leadership team the financial performance and the key performance indicators on each individual business operation that the business owns, and give them an update on the budgets and cash flow forecasts based on what's happened up to date, what changes should now be made to make sure that we've got a current updated forecast available. Show you where you're headed. Now, there's some supplementary tasks that we've included in our package because there's other things happen. Other things happen every day for a full-time CFO in a fast-growing business. So you will have the same issues if you're offering a virtual CFO business. Setting retail prices to achieve profits. In the traditional way of preparing budgets, it's basically an overall figure that's been determined, sales figure of 1 million, 2 million, 5 million. What we want to then make sure is that how the charging's being made will generate that profit that's shown in that forecast. This, whether it's a retail business, a professional business, or it's tradies. And there are variations in each of those, but within the package, you have the material to undertake those calculations. One of the big problems of Australian businesses is debtors management. I think you should be evaluating quite regularly debtors days outstanding, talking to the leadership team about how the collection of money from debtors can be improved. Buying a business, the client may well decide that they want to buy another business. You're in a position to supply them checklists and forms to complete. The same with selling a business, because fast-growing businesses want to do these things. I think every business should be kept in a ready-for-sale process all the time, which means everything's up to date, whether it's in social media, whether it's list of customers, whether it's financial accounts, safeguarding the intellectual property, all of the agreements signed. That's very important, and that would be part of the CFO type process in most organisations. Succession planning. I think succession planning covers not only the CEO, but every position in an organisation, because it's training that person today, it might only be an 18-year-old, to be able to work in another job in the organisation. It's how you develop your team. And a business evaluation, we've developed a questionnaire that asks a whole series of questions and then gives a link to supporting notes to mentor your client, to give them a bit more information about a particular area so they can see where things could be changed. We now want to look at the supporting services that will assist you to do this work. And we're looking at the starter package at this stage. So this is getting you started. First of all, every package that we produce has a 13-module business advisory services training package where we take you through this process. The Business Plus newsletter we produce monthly. You rebadge it with your name and you can send to your clients. And we suggest you read it first, understand which clients might be interested in various articles. There's normally 7 or 8 articles in the newsletter. And I suggest that you make a note to ring them a few days later and see what they thought of it. Because unashamedly, Business Plus newsletter is there as a marketing tool for you to use if you're a subscriber, to get new assignments from your client, to alert them that you can undertake that work. client mentoring and coaching. We need, as accountants, to promote to clients the services that we can offer. So we've got 4 packages in the starter package, which will help you to communicate to your clients that you can provide a service beyond taxation, that you've got information available. We've got 12 client seminars on a range of subjects that you could present either on a one-on-one basis to a client within an audit a room in your boardroom where you might have 20 clients present, or you could run them as a Zoom presentation like we're doing today, especially if you've got clients scattered all over the place or traveling's a bit difficult in the big cities. You can run seminars, have a seminar program and present them for your client. What it does is conveys to your clients that you have an understanding of different types of business processes. Then we have 343, nice round figure, isn't it? 343 papers on 60 different subject headings that you can badge and send to your client. I don't think you'd send 343 papers to one client, but one client might end up with 20 or 30 over a period of time. And the idea is to back up your professional advice. They've asked you something about discretionary trust. You can send the paper which clearly identifies a whole range of issues pertaining to discretionary trust so they can see how they operate. Members Alert, we write every fortnight. It's an update on a range of issues relating to accountants to keep you informed. And if you want to send some of that information on to your clients, you may do so. So that's the overview that we're prepared to let you know about the starter package within ESS BIZTOOls. If you want to know more, we invite you to have a complimentary 15-minute session with me where I'll give you an overview of what's involved. If you'd like to book that, please give me a phone call, 1800 232 088. Or you can go onto our website, have a look at the outline of the material that we have there, and you could then view that material and you can book a session direct from the website, save you having to make the phone call. And it will tell you the times that I've allocated that I could talk to you. Only 15 minutes. And I think you will have an understanding then of how we can help you to deliver these services to your clients. We also have another website, www.essbizgrants.com.au, which will give you a great overview of grants. So you can visit that. But if you're ready to subscribe now, you've heard enough, you might be saying, that's great. You can go to essbiztools.com.au to register. We have a promotion at present. We have, for this package, the upfront discounted price is $2,100. That's normally for 12 months, but we're going to run that for 15 months if you're ready to subscribe. And we have a holiday accommodation promotion on, and if you subscribe for the starter package on and pay the upfront discount subscription of $2,100, we will give you 2 of these holiday packages, and they're for 4 days, 3 nights each, anywhere in Australia or Asia, and details are on our website. We're making this contribution because we know it's been a very difficult 3 years in Australia and the world, and you might like the idea of having a bit of relaxation. I'm sure we all do. Our next webinar in this complimentary series is on Wednesday, the 9th of November, and we're going to look at the financial forecasting package. So that's the advanced package plus the Plan Guru software and the training in utilising Plan Guru software. I think you'll find that very interesting. That's a commitment of $9,900 for the upfront discount package, which you may be interested in that. That is up to you. And then the following week on, I missed that, on the Thursday, we have the 17th of November, we have the advanced package. So you can go to our website to register for those complimentary webinars, www.essbiztools.com.au. If you would like to talk to me, please give me a phone call, 1800 232 088. Obviously, our website's www.essbiztools.com.au and also www.essbizgrants.com.au, or send us an email, peter@essbiztools.com.au. I hope that this conversation has given you an overview of what's involved in these packages that comprise the Business Advisory Services Starter Package. Thank you for watching this video on the live feed or as a direct entry, or if you're watching it later on at a time more suitable for you. If you've got questions, please contact us. Stay safe. Have a great day. Goodbye.